Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Jeff Kilburg, Chief Investment Officer of Sanctuary Wealth, for a review on options expiration Friday. So, Jeff, we're coming into the end of the quarter. We have Russell rebalance next Friday, June 25th. We have options expiration this Friday. There's a lot of volume being exchanged.
It's amazing, Joe. We saw sensational volume yesterday, and the quad which we're very aware of, is all in the face of the Federal Reserve coming out and really talking and kind of giving a little bit of jab in the face, a hawkish jab in the face after so many months. Let's go back to March of 2020 when we saw the Fed step in, when they talked about being supportive of the marketplace in perpetuity. All of a sudden, Fed Chairman Powell this week talked a little bit about that taper timeline maybe moving forward. And sure enough, we had Bullard on today, but that's produced a lot of volatility. We've seen small caps this week really be sensitive to that, down about 5% on the week. And we are just seeing a lot of dislocation going into the options market of quad witching. But I think the digestion, I don't see rates moving anytime soon, but I think this volatility we're going to have to work through over the next week.
Well, Jeff, I feel like the Fed has been so clear in terms of telegraphing its message, whether rates might go up, one or two times into 2023, whether they start tapering and so forth. Shouldn't the market be able to digest these kinds of events? It's not like it's a surprise. It's not like they're hiking 25 basis points, dialing back a little bit. It's not like is this kind of volatility warranted? How much of a shock to the system does it have to be?
I think warranted is a strong word, but I think justified. And when you see a little bit of shift of policy, where is the Fed? And I think that's the underlying, the undercurrent we're looking for. Is it mid-cycle? I think it is. And I think the big takeaway here and why we see this as a buying opportunity, why I'm seeing this really constructive, but look at some of the sectors. If it's semiconductors, some of the tech names, you're seeing a lot of people really reposition right now, but it's all due to the fact that the Fed may be moving up that timeline. Maybe those dot plots move. But to your point, the Fed's balance sheet just crossed $8 trillion for the first time ever. So, Jill, I take a lot of solace, and I'm still constructive and bullish on U.S. as well as international equities due to the fact that this balance sheet, they're not going to reduce their balance sheet no matter if they taper from $120 billion a month down to $100 billion a month. They're still supporting this marketplace. And I think that's the takeaway. Once we see next week, that's the next leg higher. Once people realize, okay, we're talking about tapering, or at least we're talking about tapering, and that's how we kind of digest and move higher.
And Jeff, let's switch gears for a moment and talk about model portfolios as we are coming into the end of the second quarter, end of the first half. Any adjustments that you're looking at over there?
Well, I think quantitatively, you're going to see a lot of adjustments coming in right now, and that's due to the fact that interest rates. When we saw the 10-year note, and we've talked a lot here on Trade Talks, Jill, and I had a pretty lonely view in 2021 as I saw the 10-year note coming back under 1.5%, and here it is at 1.45%. But when you saw Fed Chairman Powell talk this week, we saw it really spastically go up to 1.60%. But now that it's back down, the sector rotation, the model that we really like favoring in this type of environment, is going to be more considerate about its exposure. This week alone, you did see small caps down about 5%. You're seeing some value names be put away. But sure enough, it's this growth concept. If we see interest rates stay lower, which they should in this rate environment, that's going to allow some of the old tech, some of those growth stocks really prevail. And don't forget, last September, Jill, that's when we saw just absolute FANG stocks being sold hand over fist. And now all of a sudden, people are reconsidering this large cap blend exposure. That's making a lot more sense going into the fall.
All right, Jeff, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.